So rates have been really crazy lately. They've been going up, then down, then up, then back down again. But what is going on now, and what does it actually mean for you? Well, let's find out. Hey everyone, welcome back to the channel. My name's Adam. I'm your expert mortgage broker for the day, and today we are talking about interest rates, what's going on right now, what it means, and what's been happening lately, just to give you an idea of what to expect when you look at your mortgage application. So if you find today's video useful, give us a thumbs up, subscribe to the channel. So let's look at the history then. So what's been happening over the last couple of years? Well, at the start of the pandemic, everything was completely fine with mortgage rates. There was a bit of a blip where things kind of disappeared for a little while. No one quite knew what to expect, but then actually, as things kind of panned out, it was okay. You know, we survived. There was a bit of a blip where mortgages were a little bit hard to come by with smaller deposits, but that didn't last too long. People were panicking about, you know, house prices crashing and things in the pandemic, but it didn't happen. And so those rates came back after a little while and everyone carried on as normal. Rates were really, really low. But then as things progressed, we saw rates starting to creep up, didn't we? We saw inflation starting to creep up. Things were harder to get hold of. The prices started to go up for things. Your shopping, materials and building materials and things all started to go up. You know, fuel prices went up. Everything just started to go up. So that, I guess, was the start of this cost of living crisis that we're in. It's been creeping up on us for some time. It's only recently that it's really, really skyrocketed. But it started a little while ago, and mortgage rates kind of started just creeping up gently a little while ago. But then we had some government changes, didn't we? Liz Truss came along. Now, I'm sure Liz Truss isn't watching this video, so I can say what I like about Liz Truss. It really, well, it completely screwed us all, didn't it? So we were merrily minding our own business, and then along came this mini budget, which just sent the country into a complete frenzy. No one knew what was going on. Mortgage rates disappeared for a brief spell in that October last year, 2022. Mortgage rates completely disappeared. No one knew what was going to happen. House prices, interest rates, kind of the money markets and things all responded. The pound crashed. Everything just went into complete meltdown. The reason why interest rates disappeared was simply because lenders didn't know how expensive they should be. It's not because they didn't want to lend the money, it's because they didn't know how much it would cost them to get the money, so they didn't know what rate to give us. So that's why rates disappeared. But I mean, luckily it wasn't for that long, was it? So it was probably a few days. It felt like a long time, but it was a few days, really, a week maybe, whilst there weren't really many interest rates around. And then they started coming back. When they came back, gosh, they were really high. So we saw, you know, with a really good deposit, you were paying nearly 6%, or even, you know, more than 6% in some cases. So, you know, that was far from ideal. And then since then, we've seen some stability return in the government. You know, this isn't a politics show, so, you know, let's not get into the whys and wherefores of who's the Prime Minister. But we have at least seen some stability, and so that has helped interest rates. So even though we've seen the Bank of England rate going up and up and up, and it hasn't stopped yet, maybe, who knows whether it will go up a little bit more, I don't know. We have seen the Bank of England rate going up, but we've seen mortgage fixed rates coming down. So since that shambles last year, we've seen mortgage interest rates coming down. So I said then that the Bank of England doesn't necessarily dictate the fixed rates. That's because they are based on what we call swap rates. Now, I've got videos on the channel about this, so I'll pop a link in the description, go and check those out. But the Bank of England does not dictate what your fixed rate is going to be, and that is why we've seen fixed rates coming down whilst the Bank of England rate has been going up. What we have seen recently is a bit of our own kind of supply and demand issue. So lots of people have been wanting mortgages, but the lenders are keen to lend, but they're being a little bit cautious. So you'll find one lender having the best rate, and then everyone, you know, does their applications with that lender, and then that lender gets really busy. Their service standards slip, so they think, oh, let's slow things down a little bit, so we'll put our rate up and get a little bit less business. And then the next lender that then finds himself at the top thinks, oh, we're getting a bit busy, we'll put our rate up as well, and then so on and so forth. All the lenders are putting their rates up because they can't cope and they don't want to affect their service standards. So they put their rates up to slow things down a little bit. So we find that ourselves in this position where rates are going up a little bit again. But then, they calm down a little bit, and then this lender comes back with some good rates. And then this lender thinks, well, I want some of that too, so I'm going to reduce my rates. So right now, as I film this, rates have gradually been coming down over the last week. But only a couple of weeks ago, it was going up a little bit. So it's really, really volatile at the moment. So it's a little bit pot luck as to when you do your mortgage application. But if you use a decent mortgage broker, they'll keep an eye on what's happening for you. So if you go in when it's a little bit higher and then something better comes along, we should be able to swap you over fairly easily. So I said at the start then, what does this all mean? Well, it basically means that it's all a bit volatile at the moment. Things are fluctuating like you wouldn't believe. It's impossible to keep track of who's got the best deal because it changes almost daily. So the trick is to get your application done when you need to, and then just monitor it. And we would do this for all of our customers as well. We'll monitor what's happening. So if rates do come down a little bit, then we can swap. Normally, it's best we stay with that same lender. You've gone with that lender for a reason. But if rates do come down a little bit and you've got time to swap, then we can swap lenders for you. And hopefully that's not too big a process. So it's really, really, variable at the moment. And it's just luck on your timing, unfortunately. Also, with all this uncertainty and the cost of living, affordability has got harder. So lenders are using tougher stress tests and things for when they assess, how much they will lend you. So that has made it harder to get the amount. Pre-COVID, you could have looked at a mortgage lender and they'll have lent you this much. Well, now it might be a little bit lower. So that's another thing that's affecting us right now. And where do we think it's going? Well, we think interest rates will continue to fall over time, but very, very gradually. So don't go expecting a major dip anytime soon. We're expecting rates to keep on trickling down a little bit, but we'll see, peaks and troughs as we go and as we get there. So in a couple of years' time, hopefully, we'll see some slightly lower rates than we've got now. But don't go thinking, well, I'll wait a month and things will be way, way lower, because I don't think that's going to happen. I think it's going to be a slow process that we'll see gradually over the next few months and years. It's also quite hard to choose between, if we want a fixed rate, how long do we want to fix for? There's a video on the channel about that very thing that is still relevant right now. Again, I'll pop a link in the description, go and check that out. And then if you want to know a little bit more about your own situation and what is best for you and what rates are available for you right now, then get in touch. Go and check out our website, link in the description, of course, but there's also a link to book a free appointment straight in our diary, and you can speak to me or one of our other experts about what your situation is and what's best for you right now. It's completely free, no obligation, of course. So hopefully we'll speak to you soon. If not, I'll see you on the next video. Take care.